What is happening, crypto enthusiasts, and welcome back to Bitcoin Bulletin, your ultimate source for the most electrifying updates in the digital asset universe. We're diving headfirst into a news cycle that's moving at warp speed, and if you're not plugged in, you're missing out. Get ready for the pulse-pounding, game-changing stories that are reshaping the financial landscape. We've got major players making massive moves, political tremors sending shockwaves through the markets, and a subtle evolution in digital asset stability that you absolutely need to understand. Stick around, because you're about to get the unmissable, unfiltered truth. First up, we're talking about a titan of traditional finance making a significant play in the Bitcoin space. We'll break down exactly how much they've invested and what it means for the future of institutional adoption. Then, we're shifting gears to a political bombshell that's sending ripples across the entire crypto market. We'll explore the implications of a high-stakes move that could redefine stability and trust in digital assets. Next, get ready for a deep dive into the surprising calm in the Bitcoin storm. We'll uncover why volatility is hitting historic lows and what this means for your trading strategies. And finally, we're going to look at how a major player is leveraging Bitcoin's valuation for a potential stock market comeback. You don't want to miss a single second of this. Smash that like button, subscribe to the channel, and ring that notification bell so you never miss an update. Let's get into it. Goldman Sachs makes major Bitcoin investment. Goldman Sachs has significantly boosted its direct Bitcoin holdings, pushing its total exposure to over $470 million. This strategic move follows a recent acquisition of $194 million in Bitcoin, signaling a clear expansion of the financial giant's digital asset portfolio. The firm's dual strategy involves not only direct ownership of the cryptocurrency, but also a substantial $1.5 billion investment in Bitcoin exchange-traded funds, ETFs, demonstrating a diversified approach to capturing the potential of the digital asset class. This expansion underscores a growing trend among major financial institutions to integrate cryptocurrencies into their investment frameworks, driven by increasing client demand and a reevaluation of digital assets as a legitimate store of value and a hedge against macroeconomic uncertainties. Despite Bitcoin's inherent price volatility, Goldman Sachs appears confident in its long-term prospects, a sentiment that echoes a broader institutional shift toward digital asset adoption. Analysts suggest that such large-scale institutional involvement can contribute to market stability and maturity, although it may also invite increased regulatory attention. The firm's proactive stance positions it as a key player in the ongoing institutional onboarding of cryptocurrencies, with its actions likely to influence the strategies of other major financial players in the evolving crypto landscape. But what happens when political decisions create waves that even the biggest financial institutions have to react to? Prepare for a story that could shake the very foundations of digital asset trust. Trump's Fed move creates crypto instability. In an unprecedented move, President Donald Trump's attempt to remove Federal Reserve Governor Lisa Cook has sent significant shockwaves through the cryptocurrency markets, highlighting concerns about the erosion of the Fed's independence. This action, the first of its kind in the Fed's 111-year history, has been met with swift and severe market reactions. Bitcoin experienced a dramatic flash crash, plummeting by $4,000 in minutes and falling below $110,000 for the first time since early July. The broader crypto market lost an estimated $100 billion in just 24 hours, underscoring the delicate relationship between political stability, central bank independence, and digital asset valuations. The irony is stark. Trump's administration previously established a strategic Bitcoin reserve, designating Bitcoin as digital gold, and making the U.S. government one of the largest known holders of the cryptocurrency. However, the credibility and value of this reserve are intrinsically linked to the institutional trust and monetary stability fostered by an independent Federal Reserve. Trump's direct interference in monetary policy decisions, coupled with his ongoing critiques of Fed Chair Jerome Powell, raises serious questions about the future stability of the financial system. Analysts warn that this move signals an escalating campaign by the White House to exert direct influence over monetary policy, creating significant uncertainty that the crypto market inherently dislikes. The situation is further complicated by Governor Cook's legal challenge, asserting that the president lacks the authority to remove her except for legally defined cause, which she denies existing. This constitutional crisis could prolong market uncertainty for months, potentially derailing Trump's own stated goals of making America the crypto capital of the world. The market's negative reaction suggests a clear message from crypto constituencies. Attacks on institutional independence undermine the very foundation of digital asset value and mainstream credibility. As Bitcoin trades below critical support levels, the message is unambiguous. Undermining the Fed's independence is detrimental to the digital asset industry and the institutional trust required for initiatives like the strategic Bitcoin reserve to thrive. While political storms brew, the digital asset world is experiencing a surprising calm in its price action. Get ready to explore the new era of Bitcoin volatility. MicroStrategy's Bitcoin valuation strategy. MicroStrategy, a company long recognized for its aggressive Bitcoin acquisition strategy, is currently seeing its valuation heavily influenced by its substantial holdings in the digital asset. The company's stock performance has become increasingly correlated with Bitcoin's price movements, positioning it as a quasi-Bitcoin ETF for many investors. This close relationship offers a unique opportunity for those looking to gain exposure to Bitcoin through traditional equity markets, potentially providing a more familiar and regulated avenue for investment. The company's continued accumulation of Bitcoin, even amidst market fluctuations, signals a strong conviction in the long-term value proposition of the cryptocurrency. This strategy has not only boosted MicroStrategy's market capitalization, but also positioned it as a bellwether for institutional adoption and sentiment towards Bitcoin. Analysts are closely watching how the company navigates the inherent volatility of Bitcoin while continuing to meet its operational and financial obligations. The potential for a significant stock recovery is directly tied to Bitcoin's future performance, making MicroStrategy a compelling case study in how corporate strategies are adapting to the rise of digital assets. The company's ability to leverage its Bitcoin holdings effectively could set a precedent for other corporations considering similar diversification strategies, further integrating digital assets into the mainstream financial ecosystem. The market is keenly observing the interplay between MicroStrategy's corporate strategy and the broader cryptocurrency market dynamics, anticipating how this symbiotic relationship will unfold and influence future investment trends in the digital asset space. As institutional players solidify their positions, the underlying stability of Bitcoin itself is undergoing a fascinating transformation. We're about to uncover why the market is getting quieter. Bitcoin's shift to calculated growth amidst low volatility. Bitcoin's market recently experienced a notable shift, with its price retreating below the $110,000 mark, a move that triggered over $900 million in liquidations across leveraged positions. This downturn has led analysts to caution about potential further declines by the end of September, with key support levels like $100,000 now being closely watched. Simultaneously, a striking trend has emerged. Bitcoin's annualized volatility has hit historic lows. This reduction in price swings is largely attributed to the increasing institutional adoption and the proliferation of regulated financial products like Bitcoin ETFs, which have smoothed out speculative trading opportunities. Consequently, many investors are seeking more stable returns, with cloud mining platforms such as Richminer gaining traction as an alternative for consistent income generation amidst reduced market volatility. This pivot from speculative trading to more stable investment strategies highlights a maturing market where predictable returns are becoming increasingly attractive. Despite the lower volatility, traders remain cautious, mindful of macroeconomic uncertainties, and evolving Federal Reserve policies that could still impact Bitcoin's trajectory. Looking beyond price action, innovation continues, with projects like Bitcoin Hyper aiming to enhance Bitcoin's scalability and transaction efficiency through advanced Layer 2 solutions. This focus on technological improvement is crucial for expanding Bitcoin's utility and addressing its inherent limitations. As Bitcoin continues its integration into traditional finance, its market dynamics are increasingly mirroring broader stock market trends, suggesting a period of more calculated growth rather than purely speculative surges. The interplay between institutional investment, technological development, and macroeconomic factors will continue to shape Bitcoin's path forward, marking a significant evolution from its historically chaotic price movements. And as we wrap up today's deep dives, let's take a lightning-fast look back at the biggest stories shaping our world. Get ready for the recap. That's all the news you need to know for today. We saw Goldman Sachs making big moves in Bitcoin, Trump's political shakeups causing market turbulence, MicroStrategy leveraging its Bitcoin valuation for stock recovery, and Bitcoin itself settling into a period of lower volatility. Make sure to hit that like button, subscribe to Bitcoin Bulletin for all your essential crypto updates, ring that notification bell so you don't miss a single video, and let us know your thoughts in the comments below. You can also follow us on all our social media channels for even more insights. We'll see you in the next one.